Hey everyone, welcome back to the Your Money Your Life podcast. We're on episode 320 of the pod. So do me a favor, make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast. You can also watch on YouTube. We're doing a bunch of YouTube shorts every day. We're doing those TikTok videos every day. So you get a lot of information from the social media paradigm. So make sure you do that. Let's jump into it. Our first look, as we always do, is just checking out what the market is doing. Again, there's a lot more volatility. We're going to talk about this in the roundtable, what to expect over the next several periods. We'll call it to the end of the year, pretty much in the market. So we'll talk about that in the roundtable. What to expect from my point of view as we sit now. Then, so first look at the market itself. Okay, the big thing is the 6 month. Remember this: the 6 month period. Well, the past 6 months were literally flat over the past 6 months, pretty much. So that's a big tell about what we could see going forward. If you look at again the past 6 months, we're about flat, and it kind of lines up with that November timeframes, which is interesting. Um, but over the past year, of course, you're seeing 17%, 5 years, you're up 70%. Again, long-term investors understand that. Year to date, we're down. And we said we could see a little bit more of a correction, a pullback at the beginning of the year that clears up maybe close to the second half of the year. That's a good assumption still potentially, but we'll see. Things could get a lot more volatile before then, right? We're still in the first quarter of the year. Things could still be will be a lot more volatile before then. You have geopolitical issues, you have oil spiking, you have job creation at a net zero. The Fed just talked about that. And you also have companies that are saying, hey, we are maybe cutting employees, which will affect consumers at the second layer of effect. So those are things that are really, really important to watch for the next foreseeable future. So that's why you're seeing roughly this flat market over the past 6 months. And again, for a younger person or anyone that's not retiring tomorrow, these are all buying opportunities for younger people. Because what you would you rather buy a resumed high, which you should still, because if you're young, it's going to go higher at some point, or would you just only be buying, or would you like to also be buying when things are flat or down or corrected? Those are opportunities. So let's jump into like current news. First thing is the market and the Fed's decision. It was a decision that came out yesterday. For those that are listening on Thursday, the Federal Reserve held its key interest rate unchanged in the range between 3.5 and 3.75% following the 11 to 1 vote. The Fed policymakers singled out developments in the Middle East as a source of uncertainty. The Iran war is the latest complication in an ongoing effort to hit the 2% inflation target. This is from Governor Steve Moran. He was a sole dissenter. He wanted to, so again, I think he was a newly appointed by the administration as a Federal Reserve board member, and he called for a quarter point cut, citing labor shakiness. And then Powell, the Fed chair, said he has no intention of leaving the board. Wait, so Chair Jerome Powell said he has no intention of leaving the board amid a Justice Department probe. Okay, so his term is up at the end in spring, but he's saying he's not leaving early because of a Justice Department probe. And so other things they said is that job growth um, is not great. It says that when you shake it all out, it's pretty much net flat or negative private sector job growth. And so that's one thing to note about what he said in there. And also just leaving rates unchanged. He has till a couple more months. He just is pretty much going to leave things pat until he heads out as the Fed chair, as Fed chair, and someone else is appointed. So again, they're saying there was a lot of information. They did a press conference and said exactly what they do every quarter. It said every month, and they said what was going on and what could be projected for the future. And so that was a big kind of meeting that set the tone for what we're going to see in the future. So big thing there. We'll talk more about them in the roundtable, what we could expect. I want to talk about cumulative CPI, meaning consumer price index. I want to talk about what the Fed is going to do. So we'll talk about that more in a little bit. WNBA, for my people that watch the WNBA, the players reached a verbal deal to end the labor strife. So if you didn't know, the WNBA was in a labor strife, the collective bargaining agreements between the players, owners, the WNBA, and its players have verbally agreed to a new collective bargaining agreement. It does give them a bunch of raises. The average, I think, um, the average salary raised to 600K. Supermax deals start at 1.4 million, and the minimum salary now is 300K. And so they did get this. Top stars are eligible to earn more than 1 million a year. This is the defining moment for women's basketball. This is WNBPA executive committee member Alicia Clark changing the economics of the game. So they got something done there in a deal that didn't go through. We've talked about it multiple times. Warner Bros. Netflix didn't go through. Paramount is still getting through that acquisition. But Netflix is moving on. The CEO, co-CEO, Ted Sarandos is shifting. Who is the other CEO? We never even talked about the other guy. Co-CEOs. Greg Peters is this? So Greg Peters is also the CEO. That's weird. You don't see very many companies have two CEOs anymore because it's just weird. But Ted Sarandos seems to be the business development guy, the deal guy, and the I'm guessing Greg is more of an operations guy, two brains together running a big company. But they have decided in a new interview with Politico, he said that they have ideas for more production in Europe, noting that Netflix laid out nearly 15 billion to create content there over the past years. He said they've got skin in the game in Europe. He also issued a warning to European regulators saying they're underestimating the power of YouTube as a streamer. Interesting. I don't know what does that mean, underestimating the power of YouTube as a streamer. But with the deal with Warner Bros. Not going through, they are now looking at putting more skin in the game in Europe and also other international areas. If you look at your own Netflix algorithm now, you're probably seeing a lot more international shows, movies than you had seen 5 years ago, 3 years ago, 4 years ago. So they're increasing that. And there's also another big point. They did buy a bunch of podcasts recently that are now streaming on Netflix. And so this thinking is that they're trying to change consumer behavior. Like when you think of Netflix, you're watching it at night with your partner, with your girlfriend, with your boyfriend, or whatnot. But they want to change it where you're actually playing in the car. You listen to a podcast, you're playing it while you're working, right? They want to change the consumer behavior because all it is about content and eyeballs for advertising or subscriptions at the end of the day, right? And so that's an interesting thing to note about what they're doing. And we'll keep an eye on what they do in Europe. That's really interesting. Mortgage rates, Mortgage rates reached their highest level of the year last week, pushed by the uncertainty in the war. The contract rate on 30-year mortgage climbed to 6.3% from 6.19, leading to a 19% drop in refinancing demand. So people were refinancing, but let's look at the 30-year mortgage rate chart. Um, so we got her here. So this hasn't probably been updated to show the latest, but we are an upswing. We were going down, 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 down. It's going down, but we have seen an upswing, and we've got a lot of stuff going on with rates, bond rates, and now you're seeing that the 30-year mortgage rate chart is starting to tick back up, which has made people say, okay, maybe I won't refinance just yet. This is according to the Mortgage Bankers Association data released Wednesday. The spring housing market officially kicks off this week, and CNBC notes it will feature slightly more inventory than a year ago, as well as interest rates 42 basis points below last year's spring levels. So that's interesting enough. Um, yeah, I mean, mortgage rates are a little bit higher. Um, Global uncertainty tied to the conflict, volatility, and oil prices in the stock market. The Fed is expected to hold rates steady, and people are watching inflation and jobs before making any moves. So there's a lot going on in the housing market, and that plays a part into our whole general economy. Let's run into a little bit more on the market. I want to go back into that in the roundtable and talk about like what's going on and kind of what you could expect. First thing is oil is still a big factor and still being discussed at nauseum. And we'll see that the volatility in oil is actually, I want to run by what we're seeing as far as the price right now as we research it. We have oil prices still above 100 right now. So a barrel above 100 right now. It's been much more volatile than in the past. And this will probably, again, last several months. Like people thinking that oil prices will go down quickly or getting that information, probably not correct. So you're definitely going to see that in the pump, in transportation costs, in all different areas of the economy. So that's one thing. The oil prices are still putting pressure, going to continue to put pressure on just the general overall economy. Meanwhile, we have different companies that are starting to release earnings and different things. So Micron Technology shares came under pressure in pre-market trading, losing 6%. City analysts in particular, attributed the move to just some profit taking. So people were taking profits in Micron. We'll see. So again, volatility in the market is abound, right? And so what are we thinking we can look at to understand a little bit more about this volatility and why we're seeing it more than ever? I guess the first thing is to go back and talk about inflation. We understand that inflation has kind of got out of control over the past several years. And if you think about it cumulatively, on a cumulative basis, we're looking at, well, the past 5 years, roughly 26.9% inflation. So compounding, all the different years that we've seen, you're just seeing everything up almost 30% from 5 years ago, from 2021. The Fed is just in a position where they have two levers. They can cut rates or print money. So with a political uncertainty in the Middle East and conflict, they're definitely going to have to print money to pay for conflict and war. And so that's one option they're potentially has to do, or they can also have to cut rates as well. So you'll see that play out definitely in the future. So what happens now? I think you understand that with volatility, we haven't had it in a few years. Well, the stock market will see it, the crypto market's seen it. That's okay. So probabilities that we will now, if you think about when people call recession, it's actually a good time to be buying securities because one, they either have fallen already or they're going to fall, and it'll be a great opportunity to purchase securities at that time. So if you see that the stocks have been flat over the past 6 months, that's an interesting indicator. If they were up, if we had a bull market and stocks are flat over the past 6 months, the probabilities that we see a downturn or a correction are fairly high over the next 6 to 12 months when you have that flat period after a bull run. So the probability, again, I'll say it again, the probability that you see a correction or a pullback in stocks or profit taking in stocks after a bull market and then a period of 6 months of pretty much flat returns are fairly high. So that's a good indicator that one, we could see correction, and two, that's probably the best time for people to be buying when we see that correction after a flat 6 months and we have all this uncertainty and themes in the market that are pretty uncertain. So you want to look at that. That is a big, big thing and data point that we've been researching that I think will be really interesting. When you see that flat 6 months after a bull market, you probably can higher probability than not, then there is some sort of correction, which is a buying opportunity for a lot of people out there. So keep that in mind in general, and let's watch it play out as we get more data to see what really, really occurs. So that's the big thing I want you guys to hold your hat on for today. And this week, we'll be doing this every week. So make sure you share this with your family and friends, and we'll talk to you next week.